Welcome to SQE1 window, chapter 3, and we talk about transfer of money. So here we explore how money moves in a solicitor's practice. Transfers are not just about moving pounds from one account to another. They are about keeping the client's money safe, staying on the right side of the SRA rules, and avoiding the awkward phone calls saying, "Oops, we used your money by mistake." By the end of this chapter, or by the end of this session, you shall know exactly what and how transfers happen. So, once again, it is accuracy, transparency, and protection that we solicitor need to give to client money. So, transfers from client account to business account. So, when can a solicitor move money from client account to firm's business account? Of course, we have talked about it. Usually it happens in three situations: reimbursing money already spent on clients on behalf of client for client's work and all, separating the firm's share from mixed payment, and paying fee and disbursement. The golden rule is to always check that the transfer is allowed under SRA rules, that you can make that transfer before touching any penny. So remember, client money is sacred. It is not a piggy bank for office coffee burns and all. So reimbursing expenses, separating mixed payment, and paying solicitor costs and all, where you can charge money. So the next thing we got is example. Transfer from client to business, how we do this. So we got a concrete example with a scenario that we have created around Oliver Wilson. So that's a fictional name we just created here. Oliver Wilson holds £1,000 for his client. So Mr. Oliver is practicing lawyer or solicitor. Spent £500 on disbursement and need to move that 500 to the business account. First, withdraw from the client account. Now debit the client ledger £500 in client section, and credit the cash account £500 in client section. Then, now pay into business account, you need to get another entry, that is debit the cash account £500 business section, and credit the client ledger £500 in business section. Double entry ensures everything balanced and nobody's money goes missing. That's what we need to keep in mind. So next thing that we got is transfer from business account to client account. Sometimes the flow reverses. So it's not like usual, but it does, like it happens. Money must go from business account to client account. This usually happens if a client account is overdrawn or the solicitor has accidentally breached the rules. The key point is in this one is this transfer is to put right a mistake or shortfall, not for topping up tea money in the office at that point. So these are two things when money moves other side. So we got an example for rectifying the breach, and here we got Harrison and partners receive £1,000 check for Mrs. Emma. They pay £900 on her behalf, but the check bounces. Oh, awkward situation. Now to fix it, the solicitor transfers £900 from the business account to client account. Record it in two steps. First, from the business account, debit client ledger £900 business section. In business section, you need to do it. And credit cash account £900 in business section. Then into client account, debit cash account £900 client section, and credit client ledger £900 client section. Now problem solved, rules satisfied, and no angry client calls that you have just siphoned off my money. Okay, transfers between two client ledgers. That's what happens at some points that we need to transfer between clients. So not All transfers involve cash. Sometimes a solicitor moves money from one client ledger to another. This is a paper transfer and is all about adjusting liabilities rather than moving cash. It must be recorded in the transfer journal with the date, sum, and the reason. Failing to do so is a breach of Rule 8.1. Think of it as shuffling accountant paper. No actual coins are involved, but accuracy is still vital. Got an example for it as well here. And we got Mr. Thomas Clark. And that Mr. Thomas Clark instructs the solicitor to transfer £600 to Mrs. Sarah Brown's account. The double entry is debit Mr. Clark's ledger £600 in client section and credit Mrs. Brown's ledger £600 in client section once again. The solicitor must have Mr. Clark's instruction and ensure that the transfer would be permissible if cash were involved. Accuracy and client consent are key here. Don't just play accountant without permission. You need to get specific permission from Mr. Clark or your client at that point. Okay, I hope this works. And now, transfer between client account and into business account. Two things. Sometimes a solicitor must move money between clients before paying the business. For instance, Mr. David Cooper has £800 and Miss Rachel has a £300 bill. The solicitor transfers £300 from Mr. Cooper's ledger to Miss Rachel's ledger, then moves the sum from the client account to the business account to cover fee or disbursement. This ensures that money is correctly allocated before it is used. Always follow the paper trail, like following crumbs back to the kitchen at that point. So we got this example here. So the double entry for this scenario, first the paper transfer, debit Mr. Cooper's ledger for £300 and in client section. Credit Miss Rachel's ledger £300, once again in client section. And later transfer to business account for payment. By recording each step correctly, the solicitor keeps client money safe and compliant with SRA account rules. So this is what happens. So now you need to go between accounts and later you can transfer it to business account, and I hope this works for all of us. Separate designated and general client account. Client money can be held in a separate designated account for special clients or wealthy clients or a general account for multiple clients. Money in a separate account is usually not used for disbursement directly and must first be transferred to the client account and afterward it is used. The SRA rules require accurate record of all balances to ensure no client's money is used without permission. Treat each client account like a locked box. You cannot dip in unless the key is there. So that's what is the key for understanding. So maintaining record of transfer. Record keeping is critical. It's essential. It is obligatory. So every transfer, whether cash or paper, must be accurately recorded with the amount, date, and reason. A combined cash account shows totals in separate designated accounts, and ledgers show the amounts held for each client. Accurate, systematic records are the backbone of compliance and the solicitor's defense if questions arise. Messy books are not only confusing, they can be costly. So in solicitor business, like in property, it is location, location, and location. In your law practice, it is compliance, compliance, and compliance. So SQE tips and pitfalls, our favorite slide. So always identify first, is this client money or firm's money or a paper transfer? Many students confuse debit and credit and forget to record paper transfer in ledger. They think money is there, we don't need to do anything. Paper transfer do not touch cash account but still require double entry in both clients' ledgers. Always follow client instruction. Check that transfer are allowed under rules and maintain detailed systematic record. Remember, clear, accurate, and compliant entries will save your marks and potentially a lot of headaches once you start your practice. So I wish you all the best with your SQE1 preps. So thank you for being with us today. Ta-da for now.